Back to another weekly review. We're going to be looking at the trading week of April 13th, 2026. Going to go through data as well as earnings first. We don't have a ton this week. Obviously, a pretty eventful weekend with headlines with what's going on with the negotiations with Iran. So looks like potentially we might have a gap down or a gap lower from Friday's settlement, just with the headlines that we have. And I would assume oil is probably going to be moving up in the short term. So we'll talk about that in a little bit, but we'll get data out of the way first. So Monday, we have no major data. Tuesday, we have PPI at 8:30. Then we have Fed speakers from 12 to 4 p.m. Wednesday, we have the manufacturing index at 8:30, and then Fed speakers the remainder of the day, basically. Nothing really super important on Wednesday. Thursday, again, Philly manufacturing index, 8:30 a.m., and then we have jobless claims at 8:30 a.m. So again, nothing major. And then Friday, we have no major scheduled data, other than some Fed speakers for a lot of Friday. And again, obviously, this is what's on the calendar. We can't really control what's going on with headlines because I would assume we're going to get a lot of those this week. So earnings start, which is cool. So we're back into earnings season. So Monday we have banks starting. So Goldman Sachs, obviously before they open on Monday. Tuesday we have JP Morgan. We have Citi, as well as Wells Fargo and J&J. So J&J for defensive sectors will be interesting to see. We have Morgan Stanley Wednesday morning, as well as Bank of America and PNC. And then Thursday morning, we have TSM, as well as Charles Schwab. I can never pronounce that. And then PepsiCo. And then after close on Thursday, we have Netflix to kick off tech earnings. So be interesting to see, what kind of guidance, especially the banks, are going to be giving. We're in kind of an odd spot and have been for a little while, just with where the economy is, where rates are, et cetera. It's just it's an interesting time. So it'll be interesting just to pay attention to see, how they see the next quarter and how they see their forward guidance. Not that it really matters for someone that's day trading like I am, or I would assume most people that are watching this video. But it's just always interesting just to keep track of what these institutions and what these companies are looking for and saying, where they think their numbers are going to be as far as, the overall health of the economy and macro, if you care about that. So be interesting. Like I said, big weekend for headlines. We came out, I'm not American, but we came out with no deal with Iran. So it'll be interesting to see what kind of reaction equities have. I don't really know if that's going to get shrugged off relatively quickly or not. It could. That's kind of my thought here, is that it absolutely could. So what I would assume is going to happen is probably a gap lower. I would assume oil is going to catch a bid. Whether or not that gap gets bought, or whether or not any downticks get bought quickly, is kind of what we need to monitor this week, especially Globex Sunday and Monday. So we've done a few things here. So from a bigger picture perspective, the monthly is still one-time framing down. That ends if we get above 69.11s. Weekly is now into balance. So the weekly balance high is actually the same as the March RTH high. It's 69.11s, which is actually right up in here. I don't have it marked, but it's right up in here. I should put that on the chart. And then the low is 63.59s, so all the way down here. So we have a fairly large, fairly substantial weekly balance range that we've just put in, and then the daily is one time framing up, and that would end if we lose Friday's low right here. So what does all this mean? The big thing really is that the market has gone from a period of imbalance back to balance. So basically we've bottomed out, at least for the time being. We put in a local bottom for a fairly substantial rally higher. The big thing, at least, that we need to monitor now is whether or not the market continues to frame value higher on higher time frames and continues to accept value higher on higher time frames, which it is trying to do. So on both index, actually all three indexes, if you look at the Russell as well. I don't count the down, but if you look at the Russell as well. So with that being said, immediate levels of focus really for me going into Sunday, Monday, and carry forward through the rest of this week on ES. Friday's session, a couple things. Friday's session was a neutral extreme down close day. So basically neutral extreme days are generally good indications of continuation moves in the direction of the close. So basically you test both sides of IB, close outside of one side of IB. So failure at the top, closed outside in the RTH session, closed below. We also have a bearish imbalance on Friday, down basically into 68.20s, and last week's POC down into here. So face value, a day like this, a neutral extreme day closing below IB, as well as a bearish imbalance, also a poor low here too. A bearish imbalance and a poor low generally would signal that, we have unfinished auction down into this range. And what we'd really want to see from a buyer's perspective or a seller's perspective is this auction complete. So basically continue down, fill out this range, fill out this profile, fill the imbalance down, and then see whether or not there's acceptance below, or if there's no acceptance or ability for sellers to take it lower. So that's probably going to happen, unfortunately, with a gap. So I say unfortunately because, unless you're swing short, you're probably going to miss, a decent amount of that move. And then we just kind of have to monitor what's going to happen, at that time once we find some higher volume, probably into the Euro session. So the immediate focus for me really is going to be into Friday's low, which was also extremely deep bid, as well as the singles that broke us higher. And again, I think we're probably going to gap below this. So probably what I would want to monitor right away is whether or not, we have any acceptance above or below last week's POC, especially the RTH gap at 67.80. So this whole range of basically 68.14s, 67.80s is going to be really critical. What buyers want to do is basically hold inside a value that we framed higher last week. And obviously we have a massive RTH gap here from 67.80s down into 66.60s basically, which remains unfilled. And inside this gap, we have the 200-day moving average right here, simple moving average right here at 66.90s. You can call it 6,700 basically. So really big thing, watch the open, watch Sunday's open, watch Monday as well. If we can't, if we're gapping below, or if we can't recover last week's POC, basically right here, into 68.15s, testing this gap lower is very, very likely. And what I would probably want to see again, if I was a buyer, is I'd want to see no real ability to sell below 67.80s. I'd want to see a really quick and clean recovery below 67.80s, which gets bid right back up and puts us right back into the meat of last week's distribution and the meat of last week's value. If we start to offer 67.80s, there's nothing here. So really what I'd want to do, from a trade perspective, intraday trade perspective, is I'd want to be on the short side. If we're offering 67.80s and it's clear that, we're just going to potentially liquidate, I'd probably just want to hold short and see if, first of all, if we can fill down into the 200-day moving average, but potentially fill all the way down into the gap at 66.60s. So 67.80s is going to be really the big critical pivot. But again, the big thing really is going to be watching if we're building time, volume, and acceptance again into this 68.15s to 67.80s range. If we can't sell below and we can't nuke the gap right here, it just stay long basically. Like if we're going to shrug off those headlines and the market wants to keep bidding, we shouldn't really spend a lot of time below 67.80s. That'd be the way I would look at it. Obviously, last week we have pretty nasty highs, and then we also have the the pivot of the big pivot really above this is going to be 69.11s. So if we have, if we shrug off the news entirely and we gap up, or we just continue to bid, which I really think is unlikely. But if that is the case, then 69.11s will be the big area to monitor going forward, and that should be a carry forward level as well for the rest of this week, rest of the quarter really, because that would put the monthly back into balance, taking out 69.11. So I'd pay attention to that above. But really big thing is just going to be watching how we respond down into the meat of last week's value, last week's POC at the 68.15 to 67.80 range, and whether or not we puke below, or if we're holding, putting in decent lows, and we shrug off those headlines, which is entirely possible. The NASDAQ basically is the exact same thing. The big thing for me really is going to be, again, NASDAQ actually outperformed ES on Friday, had a better close, and was putting in higher highs and higher lows versus lower highs and lower lows the entire day. So obviously tech beta and beta was catching a bit more of a bid on Friday. So I think one of the leading things you want to be watching as well is the NASDAQ holding up better than ES? If it is, then we might have an early indication of some strength and potentially shrugging off a lot of the fears and a lot of the headlines that we have this weekend. But the big thing really, again, is going to be, a super deep bid that we had at 25 160s. We have an incredibly important higher time frame pivot here, which is actually the March high at 25 250s. This range here immediately is extremely important to me. And again, I would suspect we probably got below it just considering the headlines that we have. But the big thing really will be this 250 to 150 range. It's going to be critical in the market, and I would carry these levels going forward. If we're finding acceptance below 25 150s, basically, again, we're probably going to be coming back into the meat of last week's distribution. Might even got below this, but coming into the meat of last week's distribution. And what we really want to see, we don't really want to see buyers. If you want to be on the long side quickly, you don't really want to see buyers losing down into the gap in 24 930s. So like if any ability to sell below this, we want to see it bid right back up very, very quickly. We want to see good lows put in. We want to see, good buying tails, good excess get put in below this. We want to see no acceptance below 24 930s, basically. If we start to offer this, it's the same thing as yes. There's jack shit under this in this giant price vacuum we have in this RTH gap. So a couple areas to look for. If 24 930s go offer, then first thing I'll be looking for is a test down into 24 750s and then 24 650s. So basically 750, 650, we have the 50-day moving average, simple moving average, and 200-day moving average, just natural targets below this. And then potentially look for the entire fill all the way down to 24 400s because there really isn't anything in here. If we're below the meat of last week's inventory on both indexes, so if we're below where buyers basically were trying to establish a footing, all this inventory can easily liquidate us back and fill these gaps. It's very, very easy for us to do that. So I would just be conscious of trying to catch a knife in the middle of this. We might see bounces off of obviously those moving averages in the daily time frame, but really if we get below those gaps and filling these is going to be fairly easy. Just from a move perspective, because there really isn't a lot short term inventory that's going to try and hold us up. So if we do come down and fill the gaps, those could absolutely, put in a low and could put in a reversal. Again, the big thing with looking at, what higher time frames are doing is that the market is actively trying to establish value higher. And it has been for, the last week or two, basically. And last week, obviously, with the big gap on news, we tried to do that the remainder of last week. If we fail to do that, so if we fail to accept the range that we basically have put in last week up here, then a short-term liquidation potentially filling these gaps is quite likely, and we might just return to a natural area of value, which could also be all the way down into here, back into 65 70s, down into 65 50s, where we have a very established trading range. So we've been trying to get away from this range. The NASDAQ especially, if you look at higher time frames, the NASDAQ has really been trying to get away from 25 250s for quite a long time, and it's had no ability to do so. We tried on Friday, we closed the week above it, but whether or not this latest round of nonsense we have going on takes us away or potentially fails it again, yet to be seen. But I think as far as immediate terms, what we're looking for really here is this area here, this 25 250 to 150, again going to be critical from a buy side perspective. If you want to be a buyer, you want to see this recovery very quickly. And if you're a buyer, you really don't want to see us liquidate below 24 930s, because then you'd want to stay short side, or at least I want to stay short side and look for that move down and potentially fill all in the gap. Gap risk, quite high. No idea where we're going to open come Globex or even come Monday, to be honest, as a result of it. But at least some areas to look at to manage that you can carry forward this week to see what we do. Same thing is true with oil as well. I mean, obviously, all of this news is probably going to send oil pretty quickly. It liquidated pretty hard last couple of days. Last week, I don't even know if I have this chart loaded. No, I don't. I'll just wait for a second here. But we liquidated pretty hard the last couple of weeks, or last couple of days, I should say. Obviously, we had this massive, I think this was like a 16% down day we had on Tuesday, I guess that is, last week. So we had that, and we've just kind of, we're just kind of back into this old trading range we had between 90 and 101. down into here. So levels for me that I'm looking for, again, tricky because the gap risk higher is quite high on oil. But I would be conscious basically of this entire 16% down move we have that was done on, not a lot of volume. It was a very clear, long liquidation that we had. If we start bidding back above the $100 mark, basically, that I think, you could potentially see a backfill up here. And we could actually come back all the way back up into, 110s fairly easily. So I would just be cautious in trying to, reshort oil and probably look for the long continuation trades if we start getting back above 100 again. So oil is very fickle. Oil trading for me is mostly automated. I don't really do too much discretionary trading on oil anymore. So it's one of those things where if I have a signal, I buy it or sell it, and if I don't, then I don't touch it usually. So. But as far as, where I'm looking, I think, above 100, the long continuation trade back is probably fairly safe. And then obviously, these pivots up in here, this 100 to 102 area, if we start to see, a decent offer come back in, could set up a lower high. It's probably going to happen with news again too, right? I'm not really, personally, I'm not really bullish long-term oil. Just from a short-term perspective, with the volatility happening, with everything happening with Iran, obviously the trade is going to be probably both ways. We're getting really violent moves both directions, which have been very fruitful. But as far as, from a longer-term perspective, really, I mean, once there's any type of resolution to this conflict, oil is going to come back. Oil is going to come back down, as demand starts to slow, et cetera, et cetera. So I don't know what the timeline is going to be for that. We could stay elevated for quite a while. But as far as the ultra bullish outlooks, which a lot of analysts are throwing out, $150, $200 a barrel. If oil goes to $200 a barrel, I will be preposterously short. So maybe I'll blow up in the process. That'd be fun. I'll make a video about that if I did. But yeah, I don't think that's super likely personally, but we'll see. So anyway, if any of this video helps, like the video, subscribe to the channel if you haven't. I appreciate your time. Thanks very much.